But Asian Paints, that is the one which is 2.3% down in trade. Net profit at 1,574 crore rupees versus a poll of 1,300 odd crore rupees. So it is a beat when it comes to the net profit of Asian Paints. We'll also look at other numbers. Of course, there's a sudden spike being seen as the numbers getting digested. 9,182 crore rupees when it comes to the revenues. So slightly lower than the expectations to the CNBC-TV18 poll when it comes to the revenues. But on the net profit front, Asian Paints has shown a beat in the last quarter gone by. We'll wait and watch out for more numbers coming in and the profitability numbers as well, and what has really impacted the profits of the company despite the revenues being lower than the expected poll. So Mangalam Maloo is right here. He's been tracking the company closely. Mangalam, what is the first up reaction with these two numbers showing in? Definitely profits have beaten our expectations.
Yep, basis the two numbers that are flashing on the screen, it looks like there has been a bit of an operational beat, and that was largely understandable, mainly because raw material prices have come down, though we'll have to look at the EBITDA numbers that should come off for your screen quickly. The one reason why maybe the revenues could be lower than what the street was anticipating could be perhaps that the company has passed on a higher price cut to all the customers as against earlier, and we have some details as well. So the company said they are looking at double-digit volume growth and healthy value growth in the decorative business in India. And that's a positive, largely because the street was working with a volume growth of anywhere between 10 to 12%. By them saying that domestic decorative business has registered double-digit volume growth, it implies that it's about 10%. EBITDA margins have come in at 23.1%, which is a sharp beat as per our expectations. So all in all, this should go down as a beat for Asian Paints, and this despite there being a slight miss on the top line, mainly because the company has passed on higher cuts to the audience or to the customers, and as a result of which they've gone ahead and reported double-digit volume growth, and they've benefited from some growth coming in the EBITDA margin as well. EBITDA margins have expanded by nearly 510 basis points year on year, so that's a big positive.
All right. So EBITDA margins at 23.1% versus the poll. So it has beaten the profitability aspect or the margin aspect by a huge margin. Any segment from which the most amount of this operational performance beat really coming in for the company, Mangalam?
Well, majority of their revenues coming from paints business itself and domestic paints itself. Out there, the standalone domestic paint sales have increased by about 7%. So my sense is that the volume growth could be around 11 to 12 odd percent, slightly the higher end of our expected range of 10 to 12 odd percent, and that's because the company would have given about 500 basis points in terms of realization cuts in terms of prices and lower value mix as well. We do have Naveen Kulkarni joining in. Naveen, the company's passed on a little more in terms of price cuts, but no problems because the margins have expanded by about 510 basis points. The net profit has beat estimates, and the volumes also have reported a double-digit growth.
Yeah, clearly the numbers are better than what we were expecting. So we were expecting around 2,000 crores kind of an EBITDA number. So the EBITDA number has beaten our expectations by a little over 5%. So that's a significant positive. Obviously, the PAT numbers, since there was a significant beat on EBITDA numbers, the PAT numbers are also almost 10% higher than what we were expecting. So on both counts, looks to be a beat. Only question is, what is the volume growth for the quarter? We were expecting around 10 to 11%. But if it's in the range of around 11 to 12%, that's also a very, very good number.
Right. The one thing that has disappointed a little is the home decor business. The street was anticipating a higher growth come by in their home decor business, but bath fittings has seen a decrease of 28% in their sales, and kitchen business too has seen a 12% decrease on a high base. The company says both of them are on a high base, but remember, in the overall scheme of things, these are also growth businesses for the company. What are your thoughts on this weakness that we've seen in the home decor business? Of course, it doesn't count for much in terms of valuations, but it's an important point to ponder over.
Yeah, so the important aspect about all these businesses are whether they are getting the broad metrics right or not, right? So these are businesses which are long gestation businesses where growth rate, of course, is important, but more important is what is the value which is being provided to the consumer. So as of now, till now, we have seen that they have been on the right track. One quarter numbers here and there could be a mix of lot many things. Inventory could have been higher, then inventory would have been cut down. There could have been price cuts. There's so many factors which could play out. But I believe that these businesses should be looked at from a 3 to 4 quarter perspective rather than looking at 1 quarter, which can be slightly above or below expectations. So that volatility will be there for new businesses. But I would say that overall they seem to be on the right track. We'll have to wait and watch for management commentary on these businesses for what exactly has happened in the quarter.
All right, Naveen, just before we let you go, Bajaj Auto's numbers also at the bottom of your screen. We're going to get more details, and Sonia will come in for that as well. Final point on Asian Paints. The stock has seen some amelioration from the lows, though it trades at around 66 times 1 year forward earnings. These numbers, will they give you enough confidence to stay a buyer even at these elevated valuations?
So from our perspective, this is more of a hold. We will revise numbers post the conference call to have a better gauge of how things are likely to pan out for the year. But yeah, Asian Paints being the market leader and as a stock having, let's say, underperformed over the last 2 years,
right.
1.5 years, looks okay to me.
All right, on profitability front and profits front, it's a beat on Asian Paints, but net profit of